Trading 0DTE options on Robinhood requires a thorough understanding of the underlying concepts and risks involved. To start, it is essential to have a Robinhood account and be approved for options trading. First, understand what 0DTE options are. 0DTE stands for 0 days to expiration, which means the option expires on the same day it is traded. These options are highly speculative and require a solid grasp of market dynamics. Next, navigate to the options trading section on Robinhood and select the stock you want to trade. Choose the expiration date as the current day and the strike price you are interested in. It is crucial to understand the two types of 0DTE options: calls and puts. A call option gives you the right to buy a stock at the strike price, while a put option gives you the right to sell a stock at the strike price. When trading 0DTE options, it is vital to set clear goals and risk management strategies. Since these options expire on the same day, time is of the essence. Monitor the market closely and be prepared to make quick decisions. A key concept to understand is the Greeks, particularly delta and gamma. Delta measures the rate of change of the option price with respect to the underlying stock price, while gamma measures the rate of change of delta. To trade 0DTE options effectively, it is essential to stay informed about market news and trends. Keep an eye on economic indicators, earnings reports, and other market-moving events that can impact the stock price. Finally, always prioritize risk management when trading 0DTE options. Set stop-loss orders and position sizing to limit potential losses. Never risk more than you can afford to lose. And always stay disciplined and patient. By following these steps and guidelines, you can develop a solid foundation for trading 0DTE options on Robinhood. Remember to stay informed, adapt to market conditions, and always prioritize risk management to achieve success in this high-risk and high-reward trading strategy.